Alrighty, let's get right into it. I just wanted to show you guys a couple of things. It's gonna be a little bit of a charting session type material here. Um, I'm gonna be showing you guys some things that a lot of traders probably don't show you guys. So let's get right into it. No time wasted. First things first. I want to show you guys this indicator, okay? And I'm not a big fan of indicators, right? Not a big fan at all. But look at this one, guys. So, you got London session, right? Which starts at 3 a.m. and ends at 8 a.m. And then New York starts at 8:30, right? This is London session. New York comes up, sweeps this, right? After it sweeps this, it comes out and takes the low. Now let's go back in time and see how many times this does this, okay? So obviously it doesn't take out this low and to come take out this high, but that's because that day we were very bearish, right? But let's look at this one. Comes down, takes this low, right? Comes right back up, takes this high. That's one. Doesn't happen here. Happens here. Comes up, takes high. Comes down, takes low. Happens here. Comes up, takes high. Comes down, takes low. Happens here. Comes down, takes this low. Comes up, takes that high. Happens here. Like every single session, you can basically comprehend that both London highs and lows are going to be touched. So that's a very good bias to have in the day. Okay, like you see how many, like another time. Like a lot of traders might not show you guys this, but I'm going to be the best mentor I can. So I'm going to be showing you guys all of the secrets that you guys need to know. Okay. All right. Now done with this indicator. Okay. Another thing I wanted to show you guys was. Can I click on that chart? No, okay. I'll show you guys a little trade that you could have taken today. It's called the turtle soup, okay? It is a great trading model, okay? Now, ICT explains this, but I'm going to be putting it into simpler terms, okay? Here. You guys see this high? Right where I was about to point at it, but right where the cursor is. You guys see that high? Price comes up, takes that high, and immediately drops. Okay. Now, why is this? If you go on the bigger time frame, you look at a fair value gap, which is an imbalance created by the market. Okay. So there's liquidity sitting here, right? And this right here, from this wick to this wick, is the fair value gap. And obviously we're on the 4-hour time frame up here, so this is a 4-hour fair value gap. Now the higher the fair value gap, the more power it has to it, okay, long-term wise, which in most cases, long-term wise is the way you want to be trading, okay? So price comes up, swoops this liquidity, and instantly rejects off this 4-hour. And if I'm not wrong, I'm pretty sure there's a 1-hour there too. Yep, so there's a 1-hour and a 4-hour. So right here is a clear resistance zone. Okay, you could have taken shorts right off this liquidity grab, and had a really tight stop loss. You could have put it above the 1-hour. Actually, a little bit higher, I would say. But anyways, let's see. What would we have targeted? Let's see. 4-hour. If it rejects on the 4-hour, we want to grab some sort of 4-hour liquidity. So at least to there. Okay. Now, another thing I want to show you guys that so many traders do not show, so many mentors do not show, is when price, so for instance, let me clear my chart for you guys. when price comes here, right? This is a 1 hour fair value gap, okay? When price comes here and rejects off this, any liquidity that it hasn't grabbed already, so it already grabbed all of this liquidity right here, okay? It already grabbed all that. So we need to look for the high above that, which would be this high, okay? And guys, really study this because this changed my entire view of the market. If price has already came up and grabbed all this liquidity and it's still respecting this 1 hour fair value gap, okay? Price is most likely going to come up and take out this liquidity next. You guys understand that? So here, I'll go to replay mode for you guys. And I know, I already saw it, but I'll show another example. So, alright, price comes up, right? Creates this 1 hour fair value gap. Price already swept all this liquidity. So, what we are trying to see is whether or not price is going to go through this fair value gap to seek lower lows, or if it's going to respect it to go on the bigger time frame of drawing liquidity. So here, so it's either going to come up here or come down and take this liquidity. Okay. So if price fails and goes through this fair value gap, okay, you know it's coming down to this low. If it respects this fair value gap, which it does, okay, comes down, respects it, big wick also, you also know that it's coming to this high, which is buy side liquidity. So because of that, from 10 a.m. forward until this buy side liquidity is taken, you should be in a bullish bias. Do you guys understand that? I think I put that as simply as I could. So, I mean, if you're trying to look for a trade here, so let's see. There's another 15-minute fair value gap right here, and because it already respected that 1 hour fair value gap, you know this 15 fair value gap is going to get respected. But, you know, price never comes down and touches that. So here's another fair value gap it created. Okay. You could have entered here. Okay. You guys see that? You know, stop below this body. It's targeted this buy side liquidity. You guys see that though? Yes. Okay. That was one of the biggest game changers for me in trading. The biggest by far was understanding this right here. I really want you guys to understand that. And again, I day trade live every single day, every single morning with my VIP members. And right now it's only $10 a month. Okay. I'm guessing in a month from now, it's going to be $50. Okay. Or at least I'm hoping. I don't know how soon my credibility is going to get out, but once people start seeing I'm credible, you know, I'm going to explode. Okay. What else do I want to show you guys? What's another example I can show you here? Price sweep liquidity comes up, takes this liquidity. I mean, guys, look, like it's back and forth all day long, okay? Price comes down, takes this liquidity out, right? Takes that liquidity out, comes back up, takes this liquidity out. You know, it's back and forth all day. It's always searching for more and more liquidity. There's three things price is always doing: rebalancing, drawing towards liquidity, or making liquidity. Those are the only three things you need to know. I'm telling you right now, those are the only three things you need to know. So right here, making a bunch of liquidity, right? Liquidity. If you guys don't know what liquidity is, all these lows and highs that price is putting in. Okay, liquidity. Boom. You guys want to know why price fell so hard right here? Because it's coming down to take out all this liquidity. You see that? And then the reason why price is consolidating right here is because it's in equilibrium, so it's in a discount, and it doesn't know which way it wants to go. So all it's doing is consolidating and taking out smaller time frame liquidities. See if I can find it here. You see, grabs this liquidity right here, grabs this one up here. You know, it's always, guys. That's how you guys can set your take profits, and you know where protected stop losses can be. I'll show you guys an example of a protected stop loss here. So look, price comes down, takes out this liquidity, right? This low here, this low right here, is a protected low because it took out liquidity already. It's a protected low until it takes out some sort of buy side liquidity. Okay, so say you guys entered here, right? Stop loss is there, and your take profit is at buy side liquidity, the last buy side liquidity. Okay, as you can see, this low is protected. This didn't come below this low, right? This comes up, just taps your take profit, which is this buy side liquidity right here. After it takes that buy side liquidity, this low is not protected anymore. And as you can see, it goes below that low all the way over here. You guys can see, I didn't even know that. I didn't even look that far. And you guys can even replay to see if I don't think I looked that far, but basically, you see what I'm saying though. Like, this low is protected until it either draws back to discount or it takes out another form of liquidity. The opposite side of the liquidity. But as you can see, after it takes its high, now this is a protected high. So, for example, now that this high got taken, and this is the latest form of liquidity that got taken out, so, liquidity, right? Now you can short, okay? Say you short here, okay? Someone's calling me. Sorry, I'm mentoring right now. I can't answer you. That was my girlfriend, by the way. I can't answer you right now. The next form of liquidity. Gosh, that sidetracked me. Next form of liquidity is right here. Okay, this low right here. Okay, so 3.84 RR. That is phenomenal. If you guys catch this entry, that's phenomenal. Now you can see that high is protected throughout all of this. Okay. That's all I have for you guys right now. I'm gonna go give my girlfriend a call. If I had credibility, I stay on with you guys, but currently no members right now. Just friends. So we'll see when I get my first member, and I'm gonna make that dude a beast. Alright guys, peace.